Good evening, ladies and gentlemen. This is Queens Public TV, and today we have a special show. As you know, we're trying to provide our consumers, our audience, a lot of information and education. And today we're fortunate to be at the office of George Russo, one of the leading real estate attorneys in Queens, New York. And let me introduce George. George, thanks for coming on our show.
My pleasure. My pleasure to be here. Hopefully we can be of some assistance in providing your audience with information as it pertains to real estate, closings, how the mortgage financing works, etc.
Yeah. Now, what's been happening is George is what's called the closing picture of baseball. He finalizes when the deals are all done. He's the final chapter in the deal. But when you're dealing with real estate, there's a lot of shows where there's no money down. There's deals where they sell you tapes. The audience out there has had a lot of bad experiences with that. What we're trying to bring you is a realistic approach to buying, handling real estate, and the whole process. And George was nice enough to bring a few of the guests, which he promised to introduce to our audience. George, can you bring us up to date on who you've brought here and what they do, please?
Yes. As an attorney, I also, not only do I represent buyers and sellers of property in private, as we call private matters, but I also, a substantial part of my practice involves the representation of lenders and lending institutions. Who I've asked to come here because of their background, their expertise, their sincerity, is mortgage world bankers, who I've had the pleasure of working with over the past number of years. They're reputable, and I wanted them to come before your audience to explain how they begin the process of a loan, what that lending process is, and what I do in that process is at the end of the loan, when the client, the borrower, finally, either through when they're involved in a purchase of a property or refinancing their property, when they've gotten their commitment and they're working towards a closing, that's when Mike or Khemraj from Mortgage World Bankers would call my firm in to handle the closing. And that's what was alluded to as the closer, or the Mariano Rivera, if you will, of the industry. But what I'd like is my colleagues from Mortgage World Bankers to explain to you, the audience, how the process begins. And then I could further down the road in our discussion explain what my purpose and my part of the process is. But first, why don't we start at the beginning and ask Mike to give us a background on the lending practice, on the lending side of the deal.
Let me just say this. Let's give an example, Mike. If I'm a person looking to buy a house, what would I'd be going to a mortgage company, or would I be going to a real estate broker, and where would some of you gentlemen come into that process?
Right. We usually come into the process after a house is obtained. So you would find the house via realtor, via the seller, and then we would come in and talk about qualification, affordability, and kind of assist you and bring you to the closing process. And we like to consider ourselves not just as placing the loan, but providing some credit counseling, where we're not just giving you a product and goodbye. We're a referral-based firm. We've been in business for a little over 20 years. Our stronghold is Queens County. We have several locations within the area. And our goal really is to provide a service. We're putting into the right product. These days, the mortgage industry has gotten a little between variations. There's thousands of variations of product. So we try to make it simpler for the individual and trying to create a match on the affordability side.
Now, what I've heard a lot, and you can chime in when you want, is that a lot of people, when they start looking for a house, I've heard, this is what we hear from our audience, is that they want to be pre-approved or have the financial capability, because a seller doesn't want to start selling a house to someone and then find out, they screwed up, they don't have enough credit, or they can't get in. So do you come into that field at all? What would you do?
I normally do some budget needs analysis, estate planning, financial planning, because I'm also a financial planner,
Right.
as well as a loan consultant. I would able to show the client what they can afford, their monthly payments and so on. I would start from the beginning, how much the house is worth and what they can afford based on their income. And then we take it from there. There's also things like their credit report that we will have to look at to able to determine the interest rate and the amount of loan that we can able to give them. There are various programs we can offer clients 100% plus seller's concession up to 106% financing. But then we have to look at each individual. We also do not only residential, but we do commercial as well as mixed-use property. We also do construction loans with multi-family, condominiums, co-op. So it's a matter of what is suitable and affordable to the clients and the customers.
So this is covering a lot of different aspects of real estate.
Yes.
Now, in general, is it best for someone to come to one of the banking or the financial places to find out what type of house or what price they can afford rather than the other way around? What's the actual best system to use for most clients? As residential, let's say.
For me, I think the first thing is that able to qualify the clients for what they can afford.
Right.
Because you see, a client might look at a property for $700,000, but it can only afford a $500,000 property.
But they're wasting their time, basically.
Exactly.
But
So
you would give them guidance, basically what they would need?
definitely, definitely, because in this way I can able to do a budget needs analysis, and if they have credit problems, I can able to instruct them how they can able to resolve these things, as well as to by the resolving some credit issues that they might have in their credit report
Right, that's important.
to increase their credit score.
Now, have you run into a lot of cases where there's seller financing, or do you ever get involved with the clients that way?
The seller paid closing costs have actually become very popular in our area.
What does that mean exactly?
What seller paid closing costs are is as an incentive to sell the house. The seller is making financing for the consumer easier by adding the closing cost in the price of the home. So at that point, the borrower can get 100% financing and the closing costs paid by the seller, so there's no out-of-pocket money.
The seller would do the financing?
No, the lender, we would do the financing as a lender, but the
Right.
seller would give a concession towards the closing for the closing costs.
So it would make it easy to get the deal done.
Yes.
Yes.
We call that, as Mike was saying, a seller's concession. And over the last number of years, we've been seeing more and more of that, especially here in Queens County with a very active real estate market. And we're seeing it quite extensively now as the market shifts a little bit from a seller's to a buyer's market. The sellers are more apt to give that incentive or be accommodating to that regard. And what it is assuming the price of the house was $500,000, and Michael Khemraj's firm would say to the borrower that your closing cost might be 6%. So if my quick mathematics is correct, that would be around $30,000.
$30,000, which is a lot of money.
We would make the contract, and this is all legal, acceptable by the banks. We'd make the contract look like it was $530,000, the purchase of the house. So we'd bump up the purchase price from $500,000 to $530,000. That would allow the borrower to go for, in some cases, 106% financing.
Right.
So that $30,000 of the closing costs is built into the loan, and they're paying it over the life of the loan. And then the seller, who pays transfer tax based on the purchase price, would be reimbursed for that $30,000, tax on that $30,000 at the closing. So everybody's made whole. It's an accommodation by the seller to the buyer, and it allows the buyer to purchase a house, the house of their dreams,
Exactly.
for, in some cases, no money down. I mean, they do have to pay it over the life of the loan,
Right.
Yes.
but it makes it easier for a buyer to get into a home, makes it easier for the seller to sell his home.
Now,
Right.
let's go over like an example. With your firm, George, do you